Hello, this is Jordan, and this is your precious metals video market update. This video is being recorded on the late evening of Wednesday, November 13th, 2020. And in this video, I'm going to provide a technical update for both gold and the gold stocks. And starting off, let's take a look at the weekly gold chart. And down below, I have the net speculative position for gold. As you may or may not know, I plot that as a percentage of open interest. It gives us a consistent look over time, as you can see. And starting at the top with gold and its weekly action, in the short term, a couple days ago, I believe we put in a short-term low as gold bounced from support around 1445. However, aside from that, the short term is still somewhat broken, and I think the odds favor gold coming down to test 1400 and potentially its 200-day moving average at 1393 or a little bit lower. So look for more correction both in terms of price and time. And what I'm focusing on in this chart is the fact that more spec longs need to be cleared out of the market. The net spec position was only 46% last week. Now, the reading that we will get on Friday is probably going to show something in the low 40s, I'd guess 40 to 42%. Now, the peak was at 56%, so we haven't quite seen the kind of selling from specs that we need for gold to be able to stabilize and then begin its next leg higher. Now, if you go back and you look at the bull years, and specifically 2002 to 2009, there were many times that the net spec position bottomed around 20 to 30%. That's what I'm showing there with those horizontal lines. One is at 30%, one is at 20%. Those are the blue horizontal lines. And while it's true in 2009 to 2011 that the net spec position did not come down as much, gold was already in a bull market for many years at that point. It had really strong upside momentum. It was in new all-time high territory, so therefore the speculation would be at a higher clip, and therefore the net spec position would be in a higher range than it is compared to now, and also where it was in the early 2000s. I think the early 2000s is one of the best comparisons for where gold is now. And so for those reasons, I do believe that the net spec position needs to come down. But regardless of the net spec position, just the price action is telling us that gold is more likely than not to come down and test 1400, maybe a little bit lower. And as that happens, that net spec position should come down into the 30s. And also keep in mind, the spec longs, they can be cleared out also when the market goes sideways. So, gold, if it bottoms at 1400, it bounces, maybe it trades in a range for a little while, it goes sideways for a little while. That can also reduce the spec longs in the market. So those are the things to keep in mind with respect to gold. But my real focus is on the miners and the gold stocks and silver stocks for several reasons. But normally I post this chart at the end, but I think we should keep an eye on the big picture before we get to the short term. And remember the big picture in the gold stocks. GDX and GDXJ are setting up for a potential huge breakout, likely in 2020. And if the breakout comes to pass, and if it's sustained, there's going to be huge upside, as when it is confirmed that it's sustained, there's just going to be huge amounts of buying. That's going to be sustained. It's going to generate more momentum. I mean, look at the charts here. We have a 7-year base going in both GDX and GDXJ. And GDX, upon breaking above 31 to 32, its measured upside target is almost 50. So, round up and say that's 100% upside from where we are now. GDXJ, it's at 37. If it breaks above 50, if and when it does, it has an upside target almost at 85. So, or in the low 80s. So, we're looking at more than 100% there for GDXJ. And, what's the time frame for that move playing out? Nobody knows, but my guess would be at this point 12 to 18 months. So this could be a 2020 and a 2021 story. But we're still in the correction. We're still digesting the strong move of the last couple months and the gains over the last 12, 13 months. So that's where we are now. But keep your eyes on this big picture. Remember that, and remember where this market has a real good chance of going over the next 12 to 18 months. And, I'm starting to talk about that a little bit more because I'm really excited about what's going on in the miners. And here we plot daily bar charts. We have gold at the top, followed by GDX, GDXJ, then silver, then at the very bottom, SIL, which is the silver stocks. And we're seeing some bullish, positive divergences from the stocks. And this is what we want to see. We want to see the stocks showing relative strength. We want to see them, outperforming the metals, or at least holding up well when the metals decline. That's telling us that, this correction is probably somewhat close to being over, or it's not going to get that much worse. These are just good signs given that huge long-term bullish setup. Now, I want you to look carefully at the price action since the start of October. Now, since that happened, look at the low there at the very beginning of October. You can see that both gold and silver, they have made lower lows. They are trading, at least in the last couple of days, they were trading below the low at the very beginning of October. Those are lower lows. However, look at GDX. Look at GDXJ. They didn't make lower lows. They've basically been going sideways over the last several weeks. Again, they didn't make lower lows. Now look at SIL, the silver stocks. They've been so strong. I mean, look where they were on October 14th in that low, and look at the recent low just on Wednesday. It's way higher than where it was in the middle of October. So, what we're seeing happen is GDXJ is stronger than GDX, which is a good sign. And GDX recently is stronger than gold, and silver stocks are actually the strongest. So they're stronger than GDXJ, and much stronger, to be honest. Now, also another thing to look at. Notice how GDXJ and SIL, they made slightly higher highs recently at the beginning of November compared to their highs in October. Now, GDX didn't do that, and gold didn't do that. Silver actually did that, but that's another story. But basically, this is what we want to see. And these are good signs during a correction. The market is correcting and consolidating. This is a time of weakness, yet we're not seeing the miners being as negatively impacted as they usually are. So this is a good sign. This is what we want to see happen. And I didn't even show the GDX advanced decline line, which I show often. I just didn't want to have too many things on the same chart. But that line, which is a great leading indicator, that actually made a higher high recently. I mean, I have the vertical line there, beginning of September. That's where the market peaked. I believe at the very end of October, or maybe it's the beginning of November, that's where the GDX advanced decline line, it made a higher high. It was above where it was at its peak at the very beginning of September. Again, that is a leading indicator that's usually very reliable. That's another good sign for this sector. So I know I'm repeating myself, but these are the things that we want to see as the metals are correcting. We want to see the miners show relative strength. We want to see breadth stabilize and improve. And with respect to the GDX advanced decline line, it's doing a lot more than that. This is just very encouraging action. We go back to this in this potentially very bullish setup over the next 12 to 18 months. And we're in a correction now. Maybe it turns into a consolidation, but this is what we want to see. The miners are showing relative strength. They're holding up fairly well. And, look, They might go a little bit lower at some point if gold tests 1400 or 1390 or 1380. It's possible, but they're probably not going to go that much lower if that happens. So I really like the way things are holding up here. This doesn't mean that I think the market, the precious metal sector, is ready to blast higher immediately. I don't know when that's going to happen, but the price action and the action that we're seeing from the stocks, it's very encouraging with respect to the fact that we're in a larger correction and consolidation. And look, even if the correction and consolidation, whether it continues for another month or two, or it's 3 or 4 months, it's really not a big deal because it's setting up for something. As I showed you with the weekly bar chart for GDX and GDXJ, it's setting up for something that is potentially extremely bullish and gives us huge upside potential over the next 12 to 18 months. Now, that's all for today in this video. You can follow all my work. You can get all my free work at thedailygold.com. Subscribe to this channel. Now you can subscribe to my channel at The Daily Gold. Also, consider subscribing to my premium service. We're looking at market timing and stock selection. We are trying to get into the best stocks and the best juniors at the right time. We're looking for juniors that can be 3 to 5 baggers over the next 12 to 18 months. We're looking for things that have more upside than GDX and GDXJ. Thank you again for watching this video. I appreciate it, and I look forward to publishing another video update for you guys in the days to come.